I would like to begin today's video by amending what we talked about in Friday's video, and that was the infrastructure compromise. I fell for the bait. It was a Friday. The last 2 hours, my friend, or my neighbor rather, was opening, was opening his new restaurant. He's moved his restaurant, Gabriel's, from next to the Time Warner Center to Central Park South. So I went there for a wine tasting just to check it out, see how the construction's going, all that. That caused me to not be super in touch with the headlines, kind of just had to see the updates, and saw that the Biden White House made a counter proposal. I wasn't so sure that was going to happen. I thought it was going to be a lot of bickering, and then they were going to try and do it piece by piece. But to see them lower the total, that was quite interesting, but I didn't dive into the specifics. So I have since, and it seems to me like they cut the areas that the Republicans least wanted them to cut. Things like R&D spending. And it's okay for them to cut R&D spending, assuming the private sector is going to engage in some R&D spending. But that is an area that I think there can be some compromise on. And there's a lot of areas of this bill that there certainly are compromises on. The Republicans want to pass some infrastructure. Rather than cutting the areas that the Republicans wouldn't agree to, the Democrats, and particularly Joe Biden, chose to cut from the areas the Republicans may be all right with, or would have been fine allowing in some sort of compromise. So I fell for the bait. It wasn't really that much of a great bill. The Democrats are still overplaying their leverage hand, it seems, and not really taking the bipartisan approach, taking it our way or the highway. So we'll see what happens, because I don't know if that way is going to get all the Democrats to agree. I don't know if all the Democrats want this incredibly high spending, radical, big government approach. So we'll let that settle in the market. And today we saw interest rates fall. That was interesting. There hasn't been any bad data to point them otherwise. The Fed indicating that they are going to keep repurchasing programs pretty strong, probably taking part of an effect. But this is a cartel market. It's very, very manipulated. And I don't know how long it can stay that way before inflation becomes very obvious and things start to tick the other way. There are some people like Cathie Wood, who I think deserves the utmost respect, who claim that deflation is going to occur. And I think it might occur in some areas, but not in others. I think the money supply is certainly increased. And we want money to be a fixed resource if we've got bonds, not can just print it and make our thing not as valuable. So I think that's a short-term trend that is allowing tech to rally, which is great. We like tech, and we like it when tech rallies. We own a lot of tech over here, sought them out. But, look at energy. Energy is also rallying today. So it seems like those two moves shouldn't happen in tandem. So I'm not going to extrapolate today's moves out too far. I'm just going to take note of it and take a look at what's happening. And, as I've said, don't be totally hating tech, but make sure it's tech you like through the ups and the downs, because we have seen some downs recently. It is what it is. And if you've got something you like, you're happy to ride those downs and add to those positions. So make sure if you have tech, it's that, because it's possible tech rallies here, but it's also the selling in broader tech has to continue because there is some tech that is still very expensive. Energy seems very cheap. It seems like that is pretty widely held across the board, widely held view. So I expect buying to continue, and, energy is largely underowned. There's an incredible amount of cash on the sidelines. I think hedge funds, which are seeking returns, are going to be more inclined to buy from the energy pile, which seems higher likelihood of return, less possible downside than tech. I just think that's going to be the way it's going to go. We're going to see what happens. So the market's been chilling here. We haven't seen a massive liquidation and a massive sell-off. We had that scare about a week or so ago. Didn't happen. It found its footing. Funds raised a lot of cash. We heard Ray Dalio say cash is trash yet again today. It seems like that money that is sitting on the sidelines, of which it's the highest level since May of last year, according to Fundstrat, I believe. I believe that's what they said. I definitely heard that from them, or whatever they said, if I'm mistaking it. The highest level since May of 2020. So that's pretty high. And we saw what happened after May of 2020. And if you also look at the put call volumes In May of 2020, there was a lot of downside protection. Yet, from May of 2020 beyond, the market continued to rip. So it's possible we're in for another rip. We will see what happens. And until next time, peace out.